Good morning, pro traders, and welcome to our Monday morning market review with Ian Giffen, GoPro Trading. And it's time to get into the swing of the next week. I hope you guys have updated all your technical analysis over the weekend. So really, again, the purpose for today is for you to be able to compare what you've done with what I've got on my charts. If you've got any questions, as always, please remember just to pop them into the chat box. And if you're watching the recording, into the comments below. Okay, so the theme of last week, I think, certainly on Friday, we obviously in the run-up to non-farm payrolls, just took a bit of a breather, and the market certainly did. I think there was a bit of expectation of something about to happen, and obviously the weak jobs data that came out has led to quite a significant weakness in the US dollar, for now at least. And that's probably the main theme, I suppose, running up to the end of last week. We did have a pretty solid week, though, generally speaking. So not a lot of activity across all of our instruments, but nice and steady. Several really nice trades. So decently profitable, one of those bread and butter weeks that we love. Okay, so here we are on the Euro US dollar. Just give myself more acreage. On the weekly time frame, and you can see how we've got that bullish impulse candle and also engulfing candle for last week on this currency pair. Still very much inside of the four wave channel, of course. So nothing really doing for us there at all when it comes to our daily strategies. But on the daily time frame, we did see, after having had that significant aggressive reversal that we discussed before, where we had a phase one followed by a phase one, bringing that preceding bullish trend to an absolute end. This is, just if you just ignore the fundamental side of things at a technical point of view is called whipsaw. So here you can see how the market has whipsawed over the last couple of weeks. So we've had literally 1, 2, and now 3 phase one or impulse waves in a row. But Friday's candle did give us a bullish breakout, and that's all we're actually interested in. So that's the main thing you need to be aware of here. And that then gives you the opportunity to look on the lower time frames for to apply certainly core strategies at that level. I think there was a question from one of the members on this recently. We're looking at what we have here. We are still inside of the channel on weekly. So despite the fact that we've got a bullish impulse and bullish engulfing candle for last week, we are still inside of that range. And if you are a channel trader, then you cannot treat this as anything close to a trending market. The WM patterns, likewise, there's nothing here as well. So if you are looking to trade those, this is not a valid WM pattern by any means either. All right, so let's move on to cable, which is a little bit more interesting, although perhaps not on the weekly time frame. Still very much inside of that channel again, but on daily, a very significant continuation during the course of this morning, and it's still earlier on in the day. But you don't have anything, of course, for today. We need to wait and have a look at what happens here. This could easily come back down, although given the strength of the fundamental weakness at the moment on the US dollar, we don't really expect that to happen. But we don't trade based on our expectations. We follow our rules. So here on the 4-hour time frame, even you can see that move on Friday has just continued very strongly through the course of this morning and even in the last few hours. However, you need to still wait until the end of the day before you want to trade anything on the lower time frame there. And remember to wait for that pullback. Dollar yen, there's a lot of correlation. Certainly when we have a reason for weakness in the market on US dollars, very often the Japanese yen tends to follow suit. In any case, here we are again on our weekly time frame. So we discussed this a week ago, where we have now for certainly last week had reason to believe that we were into the next impulse wave of this bullish trend on weekly. However, we didn't get any further setup. Our final selection criteria, certainly for daily impulse, was not met here on the daily time frame at all. So we actually didn't get a trade. Having said that, that doesn't mean that we won't get one, because with this higher high last week, even though it's a bearish candle, doesn't necessarily mean that this bullish impulse wave is over by any stretch of the imagination. We'd need to have a high isolated before we can say that. So we are still in a trend and still in a potential impulse wave or phase one wave of that trend on this pair on weekly. When it comes to the daily time frame, we've obviously had a marginal outside close of the four wave channel on Friday's close. As you can see, it really was marginal. We're back inside of the channel as we speak. So if you're looking at your lower time frames for something to do here, you need to see it come back outside of that channel before you can do anything anyway. So nothing doing at the moment on this. We are still potentially, however, looking for a bullish continuation on this, given that higher time frame analysis on the weekly. Looking at dollar Swiss, very little's changed over here in terms of the overall picture, despite last week's bearish impulse candle on weekly. Very much inside of the channel, no WM patterns to look at. But that extended bearish move has shown us a continuation here on the trend on daily. And certainly we were able to snag a couple of nice trades over here last week on the lower time frame. So you'll notice, I think it was just this bearish trade over here, which if you were trading with the advanced targeting, you would have been kicked out actually this morning for a very nice win. Thank you very much. It obviously hit its standard target very easily on Friday. So that's just an example of where you can, just by following our rules and making sure that you're trading the conditions that are appropriate for a strategy, even if we still get our fair share of our losing trades, those nice big fat winners really make up for everything. Right, so on USD CAD, similar kind of story over here. Very significant US dollar weakness showing itself on this pair. Got a daily impulse, I think, running on this, which I think the trader maybe, let's just have a look. Oh, yes, perfect setup for that. And also, I mean, if you're using advanced targeting, we haven't yet hit standard target on this. So either way, you should actually be in a daily impulse on this. We did discuss this last week as well. So yeah, no excuses there, folks. This was a very easy setup. And of course, if you are on that, this needs to be updated as well. Just get this across. You obviously have been able to trail your stop progressively, and you can see the actual trade stop there. Nicely reduced risk, but looking like a very nice trade at the moment. However, we don't know what's going to happen, so let's not make any predictions. All right, so that's that one. And of course, if that's true on daily, then the same thing goes for the lower time frame. Wrong one. There we go. So likewise, I think it was on Thursday, perhaps, we had a very nice little H4 impulse, which went straight to take profit. And if you're using advanced targeting, you would have scooped a little bit more out of that. So some nice moves there. Oh, and of course, yeah, if you are trading H4 impulse, although I think that having been Friday afternoon, there's it's one of those situations where it looks nice now in hindsight, but it's not what we would necessarily recommend on the lower time frames to start jumping into trades just before the weekend. Obviously, we don't mind doing that on the higher time frame strategies. Right, Aussie, again, another bullish engulfing impulse candle last week on the weekly time frame. So that being said, it's still very much inside of the channel, and there's no valid WM pattern. But that strong bullish move through Friday last week, again with that US dollar weakness, gave us a bullish breakout here on the daily time frame, which of course sets us up for our lower time frame strategies. If you are trading those, then this is definitely valid conditions. Kiwi yen, similar picture, another bullish impulse, not impulse, but engulfing candle. Still also inside of the channel, nothing doing there. On the daily time frame, we've got a 4-wave breakout, absolutely. more of that chop, that whipsaw that I was talking about on Euro USD as well. We've seen that across quite a few of the currency pairs. But at the end of the day, hey, Friday we had a bullish breakout outside of our four-wave channel. So just watch out, because we do have potential cross correlation across many of these pairs, and we don't want to be doubling up too much on our risk. Euro yen, nice and steady. We spoke about this now for a few weeks, into now the fourth week, or certainly third week, of this bullish impulse wave on the weekly time frame. So after that original breakout, it's given us some nice trading opportunities. As you'll notice, though, last week we had quite a significant pullback, but Thursday was a perfect setup for our daily impulse. No reason not to have got into that. As I say, we don't know what's going to happen with any of these trades, but still, that's a perfect setup. Perfect trade after a breakout on the weekly, and that final selection criteria being met here on daily. So if you're also trading the lower time frames, again, maybe on Friday you would have stayed out of this market. Again, in hindsight, sometimes it's easy to say, oh, I wish we had done X, Y, Z. But if you had been brave, then Friday there was a perfect little setup here for an H4 impulse, which certainly has hit its standard target. But if you were using advanced targeting, you would still be in this trade, in fact. So a nice one, very nice one. Very nice trading conditions here on Euro Yen. All right. GBP on the GBP yen, I should say, on weekly. Still very early in the week, but quite a significant candle. The fact that we're only a few hours into our new week here, and the candle has already got a bigger price territory than last week's entire candle. So nothing doing at the moment for us on that one. But here we can see that today's bullish move looks like we might be getting a bullish breakout on our channel, which for the channel traders would be awesome to trade on the lower time frames through the course of this week, if that does continue, of course. But it has to be said that we've still got some way to go for looking at the daily impulse, because we need to get that outside close at the end of the week before we can do anything, and there's no valid W pattern for going bullish here either. So that also helps us not to have too many correlated trades on the table. There's nothing wrong with that. Swiss yen, again, we've been talking about this for a few weeks. Last week's candle, a nice impulse candle, continuation from the preceding week's breakout. So again, perfect conditions for jumping into a daily impulse on Thursday again. So slightly more initial risk on this one, unfortunately, due to the size of that initial candle. This trader obviously having done the right thing, really, and having a limit order in place, as we often talk about for daily impulse, and having trailed their stop already now just a little bit, and hopefully by the end of today they'll be able to move their stop almost to break even, using advanced targeting here, obviously, as there is no take profit on these. Likewise on H4 impulse, if you'd been looking at this, there was a very sweet little one here on Thursday, which went straight to take profit. If you were using advanced targeting on this, you actually wouldn't have moved. Yeah, you would have actually got a little bit more on advanced targeting. And in fact, that probably would have kicked you out of the trade at market open this morning, if you had already had the stop trailed before close of the market on Friday. If you hadn't, if you were a little bit lazy, it would have worked in your favor, because then you'd still be in that trade. Okay, so that's that one. That weakness also on the we saw on the USD Canadian dollar here, also showing itself CAD yen. So this obviously showing Canadian dollar strength relative to the Japanese yen. It's primarily yen weakness more than anything else, but we have seen this before. So we did talk about this the last couple of weeks, and last week was just a nice, neat little continuation, also giving us a very nice little setup on the daily impulse. On I think that was Wednesday, close of play Wednesday. We survived that pullback on Friday, Still hasn't got to that initial take profit. Again, this trader is using advanced targeting on this, but otherwise you can see what the standard target would be up here. So very nice little trade. So that's another one that those of you trading, certainly trading, even if you're trading just WM patterns, this clearly is not just a channel breakout. It's also very much a valid W pattern, with our C close down here being way above our X. So when that was still A and a potential X, it was visibly clear that for the C to be an inside C close, the market had to come down quite a long way. So a very easy one for that as well. And of course, it is also outside of our four-wave channel and just about everything else. So that's a very, very obvious trade. Aussie yen, so last week came up, we saw it testing our resistance level, and this morning already it's looking like it's testing outside of that. So got to wait and see though, because it's still very early days at the start of this week. So we can't look at this obviously for a daily impulse. Having said that, looking at the lower time frames, of course, we did have a breakout of our four-wave channel already on Thursday. So if you were brave, once again, you'll notice that there was a trade for you. You could have had a look at this on Friday, but once again, although this is quite far away from the in terms of the US dollar issues and non-farm payrolls, that was, if you'd taken that, very nice trade. Again, in hindsight, sometimes we might say, well, I wish I'd traded that non-farm payroll. Very much doable if you're using advanced targeting, of course, where you've got quite a high positive expectancy on non-farm payroll days. Okay, so Kiwi yen, this very weak bullish wave, despite the fact that technically this is still a trend, as we've mentioned over the last couple of months, and technically in a potential impulse wave. Last week we got just a slightly higher high here, so that kept us in this. Alternatively, it would have been an inside bar and would still be the same picture effectively for us. But yeah, this has just kept on going in a relatively lackadaisical manner. But technically speaking, it's a bullish trend. And of course, this is what it looks like on the daily time frame. So we've spoken about this before. Last week was just almost a repeat of that preceding cycle that we had there. And given the fact that we were that those conditions are met here on a weekly, technically these are the right conditions for your daily impulse. So that previous one didn't get to take profit. We ended up getting stopped out, I think, just short of break even. And then followed on with another impulse candle. So here you go again. And I think this one also has had its trailing stop, needs to be updated a little bit here to significantly less than what it was before. So yeah, obviously actively managing this down, but it needs to be on the lower of those two candles. Today, of course, doesn't look like it's going to make any difference if that's our lowest low, but it's moving along, nothing spectacular, but it is valid conditions. And yeah, hopefully third time lucky on this one. But you can see how that weak cyclicity over there has not really done us any favors. But those trades need to be taken. Right, Euro GBP, moving into the Euro crosses. So very little change here. We did have another high isolated, of course, but in terms of the channel dimensions, it's identical here on the weekly time frame. So we're not interested in that at all. And no WM patterns there either. Weekly, daily time frame, you can see how the market has been constrained by that resistance level, and certainly we spoke about that last week, and there was no change during the course of last week, and it looks like today it's rolling over again, and we will get yet another bounce coming down. So nothing for us to do on this one. Euro Swiss, likewise, we deep inside of that channel on weekly, and we did have that breakout, however, on daily last week. So that obviously takes us down to the lower time frames. There was an H4 impulse that ended up getting stopped out here. No particular surprise, but once again, if you were doing the cautious thing, you would have stayed out of these markets in the run up to non-farm payroll anyway. But as you can see, even if you had traded through Friday, I think those winners on those other pairs were much more than what you would have lost on some of these that didn't make it. Right, EuroCAD. We spoke about that bearish breakout in the preceding week. Last week gave us this low test. It's technically still an impulse candle, but it did close in the top half of it again. Either way, this is a not a confirmed phase one, but a confirmed breakout. We have got that breakout outside of our 4-wave channel. So it certainly conformed to the rules for daily impulse. And you can see we actually did get a setup to go short on this last week. Open of Thursday. I beg your pardon. Market open. Yes, Thursday. So trailed that stop already and managed to survive the pullback on Friday but let's wait and see. It's coming down again, but definitely not one of the better ones. And then likewise on the 4-hour time frame, we had a nice little trade there that if you using standard targeting would have hit take profit still on Thursday evening. And if you're using advanced targeting, you would have scooped just a little bit more on that. So it was quite a nice week for advanced targeting, which it isn't always. Euro Aussie still in this very weak sideways market over here. So although technically this is still a bullish wave because we haven't yet got another isolated high to be followed by anything lower. I mean, if we do get a rollover here, then most likely we're going to treat that as the isolated high. So if today keeps on coming down, we'll be able to close off that wave. But we don't really care about these markets. That's just from a point of view of the technicalities of being able to draw in your wave line, step one of the 3 steps to heaven. But you can see here on daily time frame as well, it's just very much in a range, consolidating market. Because it's quite far inside that range as well, we haven't even had any overlays on this. So dead as a door now, that one. Euro Kiwi, not much different, to be honest. Not much different at all. If this high gets isolated, looking like we might have a possible single candle wave, or it might roll over and just be an isolated high and give us a non-relevant low there. But we're not interested in this at all on the weekly time frame. But having said that, we did get that bearish breakout on Wednesday. So Thursday, we were prepared to look at this for an H4 impulse, but it pulled straight back inside of the channel. So even when we got a setup to short this, it was inside of the channel, so we didn't go for that at all. And it stayed inside of there, and it's respecting that support level. So another dead pair as far as we're concerned, much nicer instruments to look at. Just going to weekly first on GBP Swiss. Very much inside of the channel. We spoke about this being a valid M pattern, however. Certainly it was. And if you are not trading the channels or you're trading M patterns with the channels, then you would have looked at this for a bearish setup on daily impulse. I think we already discussed this last week. We would have. So that means you would have trailed your stop to, let me just have a look at this. It would have been 2 5-step rules. So 1, 2, 3, 4, 5. Okay, so actually survived that, as you can see, with that pullback there. You'd still be in this, but you would have trailed your stop to above this high with that 2 5-step rule. So very weak here on the daily impulse on GBP Swiss, but you'd be reducing your open risk on that progressively, and should be at about maybe just over half your initial risk on this one. It's not looking very good, is it? You can see how this looks like this low may well be isolated today unless it does roll over and continue. But it's not looking very favorable, even though it is still early in the day. It is starting to threaten that stop that you would have trailed to above that candle's high. Right, GBP CAD also very much inside of the channel, no WM pattern there either. But that bearish movement last week looked like this. We also had a nice little pullback. Now, if you're looking for that bearish impulse candle on daily, you would not, unfortunately, have got it on this one, as you can see here, where we did get it on some of the other pairs that we've already spoken about. We had that very nice setup candle. We didn't actually get it on GBP CAD, and it's continued all the way down here obviously requiring us to wait for some kind of a pullback. In any case, so that's certainly not something though that you would be able to do, because the market conditions for a daily impulse are completely wrong. You'd have to look at this for a H4 impulse. So dropping down to the H4 time frame, we had that set up to short this Thursday morning and went straight to take profit. We weren't even able to, if you're using standard targeting, I don't think we had much of a chance. Oh, you would have been able to trail your stop a little bit, but it went to take profit. And if you're using advanced targeting, again, you would have scooped a little bit more on that. But that's only the lower time frame strategies where we had conditions appropriate. We did talk about that breakout previously, and you'll notice that this is very strong bearish cyclicity, or has been strong bearish cyclicity, but with Friday's close back inside of the price territory of this previous wave over here was a sign already of growing weakness, and today looks like it's confirming that. So not interested in that at the moment at all. This again, messy sideways cyclicity. If you want to talk about the first of our 3-step to heaven, the first step in our methodology, this is probably a good instrument just to practice on. Not that we're interested in trading it at all, but isolated high to isolated low. We've got another isolated low here, but it wasn't preceded by an isolated high. So we're still looking for that isolated high. If today's candle rolls over and comes down, it may well isolate that, but it may not. And if this is an inside bar, it may still be a non-relevant isolated high. So that's just absolute rubbish. And it's reflected here on the daily time frame, where we're really just not interested in any of this at all. Right, last of our GBP crosses. On weekly GBP NZD, yeah, so we technically just are still, I think, inside of this. Let me just double check this. Haven't really been looking at this one much. Not sure if we got that inside close last week. Let's just check 088 and this low 05. So yeah, this actually did close inside. Also ringed that low, in fact, last week. So it is the end of that bearish wave. Technically went to the next bullish one. Interesting, with a very strong bearish high test here, though. However, it is technically still a bullish wave, and if that high gets ringed, we will then be into the next bearish wave. We can't sort of prejudge what's going to happen there. That meaning, however, because this closed inside this phase 2's price territory, technically this is still a trend, but it's as weak as it possibly can get. You don't really get weaker than that. So very much one of those markets where it's borderline. But because we also have that additional rule where we're looking for strength as well, it keeps you out of this market. But bear in mind that technically this is still a bullish trend. Here on the daily time frame, again, very much inside of that channel, you can see how that support level continued to be respected, as I think we discussed a week ago. But it certainly respected it again last week. So you can see how no change in this for the US dollar news that came out, and certainly nothing doing for us in terms of anything that we can trade, certainly with our core strategies. Right, CAD Swiss on weekly. Here you can see we've still got a very nice trend going. Technically speaking, we are in an impulse wave of that trend, as we discussed last week. Sorry about the noise in the background. And yeah, this is totally tradable, and you should be looking to trade this on the daily impulse. And I think we also mentioned last week that we did get into a daily impulse some time ago. And we're still in it. So we were able to trail the stop to break even. It still didn't get to that take profit. So 1, 2, 3, 4, 5. Yeah, we were talking about this last week around this point in time. Went a little bit higher. It hasn't threatened our stop, and it hasn't hit the take profit yet. So either way, we're still into it. We're not really worried about which way it goes. We can't lose on it. And if you're using advanced targeting, you might even get some more out of it. But I'd be quite happy to take the standard profit on that one. Right, Aussie Swiss on weekly, flat, as you can see. Really not a market that we're interested in looking at all. on this time frame, and therefore also on the daily impulse. And daily, you can see how that support level of our 4-wave and 3-wave channel is absolutely being respected. So we've got a tightening descending triangle over here with the support level firmly intact. So looking for some kind of breakout of this pattern over the next couple of weeks. But until we do, we're not going to do anything with that. Aussie CAD on weekly. So we spoke about this last week being a valid M pattern, but last week's candle not following through on that previous bearish movement. So those 5 candles being last week, 1, 2, 3, 4, 5, sorry, from that bullish one, coming straight back inside of our channels on Monday last week, and then testing outside during the course of the week, but not really doing anything. So if you were trading an M pattern over here, then after that pullback, you may potentially have been looking to short this, but that trade did not work out at all. Thanks to Friday it coming back inside of the channels once again. So nothing doing for us even, and certainly that bullish engulfing candle on Friday would have closed out any shorts, and you should have allowed any short trades to have been closed out over there, because there's definitely no way you want to keep on trading that. So yep, that's Aussie CAD. Aussie Kiwi on weekly, no real change here, although last week's candle did ring that previous low. So end of that bearish wave, but it's really nothing burger altogether. Inside of our channel, no valid W, or certainly not M pattern, no valid W pattern. So yeah, that's that. Technically, yes, we are still in a trend. Cyclicity with that breakout has not, we have not seen a breakdown in the cyclicity. And until we get a breakdown in the cyclicity, we have to treat this still as a potential trend. It'll only be an established trend if we get a confirmed bullish impulse wave here. But at the moment, absolutely not. And certainly with that weakness, even though technically this is still a bullish trend, it's not tradable. And you'll see here on the daily time frame, it was an absolute nothing as well. We've got an overlay over here, which is probably, yeah, they would have hit take profit, I think, on Friday. But otherwise, nothing doing on our core strategies at all. And Kiwi Swiss, another nothing week on weekly time frame, although it did ring that high. And you can see we're deep inside of our channel here on daily, and there's no valid WM patterns at all either. So another absolute nothing. Kiwi CAD, very similar pictures to what we saw just now. So even though it's a valid M pattern, last week didn't follow through, and you'll see how this also just bounced along on the support level here. So quite a similar picture. I think it was the Aussie CAD that looks almost exactly like this as well. So the difference here being, of course, that we didn't have a single bearish impulse candle at all on this time frame. So even if you were trading this with an M pattern through last week, then you would have done nothing. We did have that previous trade that we spoke about before, which is the hybrid strategy, which is basically a continuation strategy combined with the technical analysis and execution on a lower time frame. And that's if you were using standard targeting, it certainly hit that take profit. But if you were using the advanced targeting, I think it's, oh yes, okay. So it just managed to close outside of our take profit level for the standard targeting, which means that you would now be using the aggressive trailing stop, and you would actually still be in this trade because we haven't yet seen that make a higher high, and you would have trailed your stop to above that level. So always remember, if we're looking week on week, sometimes we have these trades that have been running for substantially more than a week sometimes. We've had some of these advanced targeting trades go on for 5-6 weeks. But you know, if we're just looking at the analysis for a single week, remember that if you were already in a trade, unless you're using some kind of scaling and strategy, you would not be taking any of these additional trades. All right, folks. So there are our currency pairs. Just a quick commentary on gold. I haven't updated the analysis on this, but interesting to see this strong bullish breakout over here. But that again really is just representing the US dollar weakness. So for those of you trading gold, you should have started trading that. Well, certainly you should be looking at doing that from today. Right, so that's it from me. I haven't seen any questions come through in the chat box. Folks, I hope that's useful for you. In case you do have any questions, please do drop them into the chat box now.